Hello and welcome to the CFO Weekly Newsletter. Thank you so much for joining me. Now, before we start, I just wanted to get to some of the results and feedback. I have a huge backlog of these. Just wanted to get through some of these now just to thank people for sending them through and some of the incredible results that we've been getting. Have a look at this from some of our day traders here. You're making consistent profits in the market. I mean, right now, this is a day trader's market, no doubt about that. Beautiful moves intraday that are really helping our day traders make some very nice money. Vicky here, $540 for the day, $277 a day for Warren. Michael, $323 US for the day, right? Just on one trade. Right, that's not for the whole day, it's just for one trade. 293 for Brian, 347 for Muriel, 250 for Brian here. Right, so some pretty good moves in the market that are enabling people to make 5, 6, 700 or thousands, as I'll show you soon, for the day. It is a day trader's dream right now. Dr. Peter Mounts here making a $400 credit on the QQQ put credit spread here. Vicky, $217. Graham, $353 in profit. One of our day traders here, Damon, made $12,000 on a day trade on Tesla, 60% return. Vincent, $489 for the day. There's another one of our members here, Francis, who made $5,271 in a day on Roku put options. Amazing. Have a look at this from Catherine, one of our day trading members. Look at some of the 1, 2, 3, 4 day trades here. Okay, so you can see that the dates here. That's not a day trade, but they're short-term trades, right? These ones within a day. This is a day trade. This is a day trade. So some nice profits there, both on that one day. $900 in profit on those two trades, plus those two day trades there. But these two are a little bit longer term, 738. This one was a day. Bought the call option here. Okay, interesting. Okay, very interesting to see some of these results here. We'll have a look at this one. Dr. Peter Mounts, 3,851 the income in a day. Very nice. Okay, very nice. Self-funded retiree doing this in his retirement account. Some of our members here, Lee, thank you very much. I just wanted to thank you. These are from our members, okay, that are watching my crisis brief. Once you become a member of CFO, we actually include the exact trades, the strike price, when you get in, what the targets are, the whole thing I map out for all of our members here. But just wanted to say a thank you for your consistent effort in putting together the weekly crisis videos. I do hang out waiting for every video. They are all so great. This one was exceptional. Everything from market prep for the sell-off, current positions, anticipation of market direction, even added psychology in the mix. That is only some of what I took away this week. She's talking about last week's crisis video that I sent out to my members. And repetition is so important. Love that you continue to explain the opening range and all the theory behind the indicators, the put-call ratio, the trend, etc. There is so much success from your teachings, and the common denominator is you and your team. It shows that you all love what you do. Absolutely, we do. This is one that I've shown people from last week. Pretty exceptional feedback from Craig here. Cash flow options is by far the best trading package available on the market and value for money. As an ex-banker, share trader, and certified financial planner of 22 years, I now do this full time and I've never looked back. I share the weekly updates with a huge network of investors and encouraging them to sign up. Well done and thank you for providing a great service. This is straight from our members. This particular member here has a $4,000 account. Thanks to watching my weekly crisis videos, she made $1,120 profit just in the 1 month. So a 25% return on her overall account in 1 month. Pretty good. This is from Kevin. So from the bottom of my heart, Sean, these weekly updates and daily videos are the best. It makes you get involved because trading is changing environment. No doubt about that. Where with a master like yourself giving live updates on a weekly basis, it gives confidence how it is done. So keep up the great updates, as belief is a great thing which you give in these updates. Kind regards, Kevin. Thank you so much, Kevin. Appreciate that. Mike, hi Sean, thank you so much for the update and all the great work you put in for helping people like myself and all the other members in the program. I want you to know that your support is greatly appreciated. Keep up the awesome value, brother, because it is definitely giving me hope to a brighter future. Much gratitude. Wow, pretty mind blowing. And again, this is just a 1% of what gets sent to me. I will get to everything, but pretty hard to keep up with it sometimes. Thank you for the incredible update tonight. So appreciated, especially the critical timing. Whenever something comes up in the market and things have changed, I will do a special video for my members and actually send it out to them, like I did this week. They got 2 videos because there was things that they needed to know immediately. So this can really help people take advantage of some of the positions that I've helped them enter. As always, it was chock full of strategies, analysis, and options to choose, pardon the pun, that you so generously continue to provide to help everyone move forward. Please keep them coming. So I love that. Thank you all so much for sending those results through. I really do appreciate it. So right now we have a very interesting market. In fact, let's look at the market first. So let's go here and have a look. Right now we do have a bullish opening range, right? Right here was the 3rd Friday of the month. The markets are closed this Friday because of Good Friday, obviously, with Easter. So we've got a shortened week. We've only got the session today and tomorrow, and the markets will obviously be closed for the long weekend. That will then give us a new opening range. So we'll set our opening range from Thursday's price action, the high and the low of Thursday's price action, and that will give us a new opening range for Monday. So as of Tuesday, we'll have more of a clear direction where this market is likely to move. So a lot of conflicting signals right now. Some bullish, some bearish, but my overall view is over the next couple of months we will see a correction or a large move to the downside. So let's go through some of these reasons now. Right now, opening range is bullish. A couple of very weak price action candles here. If we look at the actual SPX itself, we can see a pretty clear channel here oscillating between these 2 points here. We're right up against the upper level of this channel, and we'll see whether it does fail here and move back down like it has done previously. Right now, this is a severely overvalued market. If you got the market capitalization, you added all the stocks on the US market together and you divided it by the GDP of the entire United States, the total economic output, it would be 194%. Stock market 194% of the economy, that doesn't make a lot of sense. We're severely overvalued. Anything more than 115% is an overvalued market. Does that mean the market can't go up? No. 133% prior to the market selling off with the pandemic initially. So this is severely overvalued is what this is, right? So that is obviously a bearish sign for the market, but in and of itself doesn't mean a whole lot, but it's certainly something that we need to look at. If we look at some of these individual indexes right now, so the SPX, we've just spoken about that, the Russell 2000, okay, economically sensitive Russell 2000, that's below the 50, below the 21 EMA, not showing much strength right now. That is certainly a little bit weak. Okay, if we have a look here at the NASDAQ, now the NASDAQ does have an inverse head and shoulders here. So if we have a look at this, we can see that it does have an inverse head and shoulders. However, that has by no means triggered. Right? It hasn't broken above this neckline. This is again another conflicting signal here. This is bullish, but right now, if we look at the NASDAQ, it's below its 50, below its 21. And in a short-term downtrend. So there's nothing particularly bullish about that. But then if we now go and have a look at the transports, we can see the transports are very strong. They're at all-time highs. So when you're getting the transports at all-time highs like that, and then say you're getting retail that's just bounced off a significant level like the 50-day moving average, recapture the 21, when you're getting strength in the transports, which I just showed you, break to all-time highs, that can help the retail sector, because if the movement of goods is steady or growing and travel starts to pick up, then that can really help retail. So, keeping a bit of an eye on that, that could be something potentially a bullish development there in the market. But because of what's going on right now, I'm waiting until I see what happens over the long weekend, right? I need a new opening range, which will be on Thursday on the SPX. I'll have the high and the low of Thursday's price action. If we break above that high on Monday, that will give us a little more clear direction. If we break below, then that will give us some more clear direction to the downside. Now, and then we've got the industrials. Now, the industrials are at all-time highs as well, but there is a pretty strong ascending wedge pattern here on the industrials. Now, this is a reversal pattern, and in this case it will be bearish. So it's moving up strongly here. If it does break below this lower trend line, this is a very strong signal that the markets may move down. So I'm watching that, but right now it's still above the upper trend line. So yeah, nothing really terribly bearish about that. It's all-time highs. So when we look at all of the market in one snapshot, which would be on our workspace, which we use predominantly for day trading, but can still be used on any time frame, we can see here that the Nasdaq is below its 21, the Russell 2000 is below its 21, but these other three indexes, the transports, the industrials, and the SPX, are all above. So what am I trying to say? That we don't have a clear direction in the market right now. All of these indexes that make up the market are not moving in unison. When you have a strong market, they're all moving in the same direction. They're all bullish, above their 50, above their 21. We don't see that right now. Now, the other thing that we've got to keep in mind is the fact that, we know that bonds have been selling off, and we know that high yields are not particularly good for the stock market. If this continues to move down, this is another worrying sign for the markets. I mean, the yields last night intraday got as high as, on the 10-year, got as high as 1.77%. That's pretty high. Even so, I mean, pulling back to, what is it now, about 1.73, that's still very high. So that's another issue that the market has as well. High yield bonds, I'm still looking at that trend line here. If it does break this lower trend line, this is a forerunner for the stock market, and we could see some the market's heading lower if it does break that trend line. So I'm keeping an eye on that as well. I'm also seeing a lot of insider selling. There's something that I show my members, a lot of insider selling right now, and also funds selling. So yeah, we are close to all-time highs here on the SPX, and the transports and the industrials are all-time highs. But if we look really here at the market internals, let's look under the hood a little bit. We can see right now the 10-day moving average of the combined put-call ratio is at 0.81. That's neutral. Anything below 0.75 or close to it is bearish, shows excessive call buying. Not quite seeing that yet, so that's neutral. Skew, though, above 135, and it's 142, that's stayed above there for quite some time. What does that show me, Sean? Anything above 135 shows that the smart money is worried about a market crash. They're worried about a 2 standard deviation move or more to the downside. So this is a concern as well, right? Certainly the smart money's worried about a market crash, and it's something you should be prepared for as well. The SPX put call ratio. So this is something here that right now showing a lot of confidence in the market. Maybe at a bit of an insanity point here where we're a little bit too confident, a little bit too complacent. Anything below 1.75 shows excessive call buying. And that's what we're seeing right now. If we look under the hood a little bit more, we can see that the number of stocks making new highs this year, right, about 3 months into the year, is 112. Number of stocks making new lows is 303, almost 3 times as much. So, as far as momentum goes, there's about almost as many stocks above their 50-day moving average as what there is below. So, remember, this is a market of individual stocks, not a stock market. So, yes, the markets are close to all-time highs in many instances, but look at different indexes there, but there's a lot of weakness going on here. A lot of weakness going on, and we need to be prepared for it. Smart money's worried about a market crash, okay? Insiders are selling at record levels, and funds have just begun to sell as well. These are some of the things that I teach and show my members, and there's some of the reasons why we've set up bearish positions right now. So some of the bearish positions that you could set up are things like, let me just show you some of the things here. So right now for this week, the only sort of aggressive trade that we are potentially looking at, and this is only for a short term. It's only for the next couple of days. Setting up a position here. I set up a position on this last night. Did very good on this one. MARA. Set up a 44. I sold the 44 strike call and bought the 40 call. Now the reason that I did that. Now I bought that for $1.92. Okay. Now my expiry was the 1st of April, so this Thursday, because obviously the market is closed on Friday. I bought that for $1.92, okay, and I sold that for $2.80. So about $880 on that one trade, very very quickly. The reason I did it is because when I bought the 40 strike call, remember I sold the 44, I bought the 40 strike call. When I bought the 40 strike call, the stock price was at 41.96, and the 40 strike call was $1.92. So I was actually getting that at a wholesale price, right? It was $1.96 in the money, and I bought it for $1.92. So that was a great, obviously the price action as well, right? But that was a very nice trade. Made some very nice money on it very quickly. This could very easily come up to 49, 41. Come up to this pivot here. I think it could very easily do that. Obviously, your stop would be the 21. That's a pretty decent looking trade there, but 15% last night. We could keep an eye on that one, but for me right now, sitting on the sidelines is a pretty good idea. Remember that I said to you, the markets could have a significant move down in the next couple of months, and I'm setting up positions to benefit from that, protect and hedge, and also to make a lot of money if that happens, like we did in March and February last year. Now, remember what I said. If the market, let's say you've got a good quality stock, right, that's fallen from 100 down to 20, that's an 80% fall. But you've got to understand that if that same stock then goes from 20 to 100, because the market starts to recover and move higher after a sell-off, from 20 to 100 is a 500% gain. So what do the billionaires of the world do? They wait for the markets to drop or crash considerably, or big corrections, and they go in and buy, because they know the percentage returns are even better on the way up. What I prefer to do is actually hedge or have positions set up for markets to fall and then to participate on the way up. And as option traders, we can do that very easily. The click of a mouse, we can be bearish, and the click of a mouse, we can be bullish again, right? So there's sitting on the sidelines right now in a market that is very uncertain with no clear direction. This is a low probability market. Why is it a low probability market, Sean? Because there's no unison in the market. There's no clear direction on all indexes. I need the opening range to reset. I need to have a look at this on Friday. Let Good Friday and the Easter holiday play itself out, and we will come back and look at this again on probably Tuesday or Wednesday next week. No clear direction means I stay on the sidelines, right? So some of the things that you could do to set up. Now, what I've done is I've set up positions out to June. Okay, so I've taken this out to June. Sean, why did you choose June? Because in May is where I saw huge amounts of put buying with high yield bonds, right? So the smart money, some of the most sophisticated, informed investors in the world invest in the bond market. And right now, they are buying record numbers of put options in the 21st of May expiry put options. So I've taken my options that are going to make money if the market falls out to June, okay, past that date. So, SDS, that's one way of doing it, okay. An inverse ETF, as the market goes up, this falls. If the market falls, this goes up. That's one way of doing it. If you have a look here, SH is another way of doing it, right? Market's up, this goes down, market down, this goes up. So they move opposite to one another. So you'd have to buy calls in the SDS, calls in SH. Now, the Russell 2000, that's already looking a little bearish right now, and we will see what happens there. But one way you could play that to the downside. Now, this is very aggressive, right? Because it's 3 times leveraged ETF. While that sounds good, and it is if the market falls. If the Russell goes down, this will really take off, right? If this really has a big fall, this will really have a move up. But it can also hurt you on the opposite way, can't it, right? So if it can make you a huge amount of money when the Russell falls, if the Russell goes up, this is obviously going to lose money very quickly. So it's a double-edged sword there, but can be very profitable if the Russell 2000 does move down. Definitely for me, I have some VIX calls. I think that would make sense, right? I've got VIX calls out until June, like I said, right? I think there's 16th of June with these, yeah. So I've got some calls out to June. Right now, the VIX is sitting below 20. What does that show? Shows that the market is free to sell off. We're closer to the lower Bollinger Band here. That's another thing you could do to hedge your account. There's a whole range of different ways that you could do it, right? You could just go out and buy put options on the QQQ, which is the NASDAQ. You could certainly do that. You could buy put options just on the Russell itself, IWM. You could buy put options on the SPY. It's a whole range of different ways you could do it. But for me, I have positions set up right now out into June, looking for this market to fall in the next couple of months. Okay, that's what I'm doing right now, and I'm going to let the market give me a bit more direction, and then on Tuesday I will make more decision as to where the market's likely to go, and I'll really start trading again. But right now, low probability environment, I'm going to sit on the sidelines except for those positions I've got there, looking to make money if the market implodes over the next couple of months. That's it. Okay, so we're going to wait right now, let the market tell us. Remember, the market is closed on Friday. On next week's CFO newsletter, I'll be able to give you a lot more direction, a lot more ideas, but for now, you've got to be patient sometimes, okay? In an uncertain, low probability market like we have right now, it is better to just sit on the sidelines. Be prepared with some bearish ideas that will make you a lot of money or protect your account if the market falls. That's smart. I like that idea. But other than that, I'm sitting on the sidelines for now. Again, remember, a lot of money can be made on the upside even if you do miss the crash or the big move down. Much bigger returns to be made on the upside. Don't forget that. All right, my friends, I hope you enjoyed that, got something out of it. I'll talk to you all again next week. Thank you so much for listening. My name's Sean Allison. All the best, and bye for now.